Hey everyone, welcome to the KE Report. Another daily editorial here with Avi Gilbert, following up on the last time I had Avi on tail end of September, where he outlined a real bearish scenario for US markets, really for a lot of financial assets in general, couching that with also the ability of these things to move at least short term higher, which we did see throughout October, but we have started to see a little bit of weakness come into the broad averages, as well as a number of other sectors. Avi is the founder of Elliot Wave Trader and Safe Banking Research. I will post a link to those sites in the show notes. Avi, great to have you back on the show, and let's start off with the US equity markets. Looking at the S&P earlier this week, poked its head just above that 6,000 level, but has reversed fairly sharply to end this week, just in the last couple trading days. Avi, I got to ask you, potentially, is that the top that we just saw above 6,000 and more now this longer term bear market you're looking for?
Well, we had a target for this week at 60-20, and we came up about 3 points short of that. But it pretty much satisfied the structure. The problem is we broke down below a smaller degree support today. And it does open the door that a major top may have been struck. But this market has been truly impossible to kill. So before I'm willing to view a major top as having been struck, I'm looking for confirmation. And we have a support below us at 55.60 to 56.70. It's about 100 points. And as long as that support holds over the coming weeks, I think we could go down a little further and test that support. As long as that support still holds, we do have one more bigger target overhead between it's 62.73 to 63.77. That is our next higher target on the S&P 500. So as long as that next lower support holds, the market still has a path to take us higher into early next year. But like I said, once we break down below an initial, support level, a larger degree initial support level, I'm probably going to start looking at this as a major top as having been struck.
Well, Avi, just to that point, when you think about the Elliott wave, I know there's some nuance to it, but in general, there's a 5 wave up and then kind of a 3 wave down, an ABC wave down where it goes down, then up on the B wave, and then down on the C wave. From a big picture standpoint, is this looking like the end of the 5th wave up in a big Elliott wave cycle where we would start that 3 legs down in the broad markets?
The answer is yes. We are in that final fifth wave as per the way I look at the Elliott wave structure. And that's a final fifth of a fifth of a fifth. I mean, it's many degrees of fifth wave completion, the largest of which began in 1933 at the bottom of the 29 market crash. The problem that I'm having in pinpointing it as strongly as we normally do is that the rally off of the October 22 low has been taking the shape of 3 wave structures. And that tells me that this is a large, what we call an ending diagonal. And unfortunately, when you're dealing with ending diagonals as well as triangles, they will often go longer than the minimum expectation you have. And this one is probably doing that right now. So when you're dealing with 3s rather than 5s in an impulsive move, it does cause a little bit more complexity in being able to identify exactly where that top is. And that's why I need the confirmation of taking out a support level before I'm willing to confirm a top. So yes, we are in that final 5 wave structure, the final fifth, but it's taking shape as 3s and making it much more complex.
Avi, are there any subsectors within the markets, any other individual charts that you are using as a barometer for maybe that breakdown in the markets that might show you that breakdown's coming before the markets do hit some of those support zones?
Well, not really, because we view each chart on its own. So, I'm going to, you put a chart in front of me, I'm going to analyze that chart on its own based upon its sentiment reading on that chart. So when I'm looking at the overall market, I like to look at the S&P 500 as my primary go-to perspective. And we'll utilize the various supports and resistances that we identify on the S&P as that's our barometer for the overall market.
Well, and if you do finally get confirmation that the support levels are breaking, do you have any rough idea targets based on the prior wave structure of what the downside support levels would look like? How low could the S&P go? I know it's more not a time frame thing, but more of like a levels thing. What kind of levels do you have in mind for support?
Oh yeah, my first major level on the downside that I believe will strike is going to be 3,500 to 3,800. That'll be the first larger move down on the S&P 500, and then we'll probably see a multi-year corrective rally off that low. It'll probably take us back to we'll take us back over 5,000, somewhere between 5,000, 5,500, 5,600. I can't tell yet. I need to see exactly where we top and where we bottom to start making some calculations about where that multi-year rally will take shape. But my first major target to the downside is 3,500 to 3,800, and I think we'll get there a lot faster. Once the market actually tops, I think we will get there a lot faster than most people will be ready for. I think it can feel crash-like, to be honest with you.
All right, Avi. So really your targets have not changed since I chatted with you. Still looking for some of these same levels in that crash scenario and then those rallies. Let's circle back around to the precious metals then, because we have seen some weakness in gold over the last few weeks. We've seen some weakness in gold stocks. So before we get to GDX, let's talk about gold. It came close to that 3,000 level, has reversed, now more around that 2,500 level. Where is gold going from here?
Well, I'm going to use the GLD as my proxy because that's what I'm using for most of my clients. And the GLD has now come right into the support region we'd wanted to see. From here, I'm waiting for the market to provide us some indications that we bottomed. My expectation, ideally, I'm looking for the market to get back up towards 272 on the GLD. And thus far, the high on the GLD was just below 260. So I'm looking for another large rally to take shape into the end of the year and potentially into early next year. But when that rally completes, that's when I think we'll see a multi-month correction in gold. And after that, then I'm looking for a parabolic rally that'll complete the rally that began in early 2016. A major top yet having been struck in gold. We'll need to see a multi-month correction before I'm going to prepare for what I believe will be the last parabolic rally, and then begin to prepare for what I believe will be a multi-year bear market after that. So I still think we have upside to go over the next 12 to 18 months in gold before it's done.
Okay, appreciate you laying that out. And then let's look at the gold stocks via GDX. GDX was doing good. It had a pattern of higher highs and higher lows going for most of this year since the March rally, but it's really turned down sharply since mid-October. It did just go down and hit the 200-day moving average. I don't know if you put any stock in the moving averages, but how are you looking at GDX support and resistance levels?
Well, GDX also has come right down into our support box. And, can it go a little bit lower? Sure. But I'm looking for it to hold, 34, 34.50. And then my next upside expectation is about 49 to 51.50. That's my next higher target on GDX. And just like with gold, after that rally completes, I'm looking for a multi-month correction in GDX to be followed by a final parabolic rally to complete a long-term bull market in GDX. And then I think we're going to enter into a very long bear market as well.
So I'm guessing silver will follow some of these same patterns that you're seeing for gold and GDX, maybe just more extreme volatility potentially?
Well, yeah, silver is really interesting. Silver, in my opinion, has the greatest promise out of all these charts. Historically, silver has always brought up the rear when we look at the metals. Oddly enough, in 2000 and 2011, it topped first before gold did. It topped in April of 2011, and gold didn't top until September of 2011. However, if you look at 2010 into 2011 on a long-term chart, you'll see silver went into a massive parabolic move higher. I mean, it was an insane move, but that's usually how silver reacts. It brings up the rear. And I'm expecting a similar move to what we saw in 2010. History rhymes, it doesn't exactly repeat. So I'm looking for something similar to that. May not be quite as parabolic, but I'm expecting a strong, sizable move, catch-up move in silver over the next 12 to 18 months as well. And it's just a matter of just being patient with silver at this point in time, because I think it's coming. I mean, when a lot of people look at the gold to silver ratio, what is it, about 85 now? I mean, silver to gold is like 85. So normally you'll get closer to around 15 or 20 when you're looking for a top. So I still think silver is going to have a massive catch-up move once we start moving into we're moving into the final phase of this bull market. So it can happen. It can begin at any point in time now.
Well, Avi, that's good news for a lot of the folks listening that I know follow the silver markets closely and also the silver equity. So, as you mentioned, usually that catch-up trade in silver where it puts on the rocket boosters right at the very end of the cycle. We'll look for that unfolding over the next 12 to 18 months. Let's also look at the U.S. dollar, though. The U.S. dollar has been mostly range-bound for some time now, but just recently we saw a move down closer to the 100 level, and a lot of people were expecting calls down into the 90s, the mid 90s, but the dollar turned around and shot back up recently, kind of defied some people's expectations. It's up around 106.68 at the time of this call. How are you looking at the greenback?
Well, we call this in Elliott wave parlance a flat, where back in, let's see, it was back in the end of July of 2023, we hit an initial low off the major high. We had a nice size correction off the late 2022 high in the dollar. And into 2023, we had that sizable decline. Once that decline completed, we had a corrective rally up. We just chopped around for the better part of a year and stayed just over the bottom of that first move down from the highs. And now we're getting another rally back up towards the highs of the first corrective rally. So we call that an ABC flat. I think there's potential on a smaller degree for the dollar to move a bit higher, maybe even approach that 108 region. But it's from there that I'm going to expect the dollar to begin a sizable decline. And that's pointing me down into the low to mid 90s from there. So, but interestingly, after that completes, I'm expecting a multi-year rally in the dollar that potentially can point us north of 120.
Do you have a time frame on some of these moves, Avi? How quickly could that dollar decline happen?
When the dollar declines, it can decline pretty quickly, especially since we view it, and like I said, in Elliott wave parlance as a C wave, and C waves are, lovingly known as crash waves. So we could see quite a sizable and fast move down in the dollar. So it could fall apart pretty quickly.
Well, one other market that's been getting a lot of attention lately, Avi, is Bitcoin, really the cryptos in general. Some of that, a little euphoria on the Trump trade because he was very constructive on Bitcoin, but it did break out to new all-time highs recently. How are you looking at Bitcoin?
Well, we have a whole team that does Bitcoin, so I'm not the Bitcoin expert, but our team is looking for Bitcoin to go north of 100, could be as high as 125, and then we expect a very long bear market to begin in Bitcoin.
All right. Well, Avi, I guess that takes us through a lot of these charts we wanted to get through. Very interesting hearing what some of your targets are. It gives us many different levels for us to follow up with you on and to, quite honestly, just watch in the charts. Again, Avi Gilbert, founder of Elliott Wave Trader and the Safer Banking Research websites, which we will link to in the show notes. Avi, as always, great chatting with you. Thanks for your time.
Thank you guys so much. It's been an absolute pleasure. I greatly appreciate it.